Hey everyone, Dalton Grados with Grados Capital here, and this might be one of the most important videos I have made around trading and how to create a trading plan, which is very important, especially for anyone out there who is new to day trading and swing trading in the stock market. You must have a plan for every trade that you take. If you don't have a plan, you're not a trader, you're a gambler. If you don't have a plan, you're not a trader, you're a gambler. So, how do we create a trading plan? Well, first, what is a trading plan? Very simple. Don't have to make it complicated. You just need three things in order to have a proper trading plan. You need to have an entry point, an exit point if the trade doesn't go your way, and an exit point to take profit. All right, so those three things. Again, you need to have an entry point. Where are you going to enter? Where are you going to stop out or cut your losses if it doesn't go your way? And where are you going to take your profits? Now, the purpose of this video is not going to be to tell you what to do specifically or how to trade or to tell you a specific trading plan. That's going to be up to you and the trade that you choose to take, whether you're scalping, whether you're day trading, whether you're swing trading. It's going to look very different. So I'm going to give you some tools in this video and we're going to run through some examples, but I'm not going to tell you what to do. It's going to be up to you, up to the specific stock that you're trading to figure out the nuances of it, but I'm going to at least give you a bit of a framework that you can go off of to start making your own trading style that's going to be based off of your risk tolerance. If you need someone to tell you specifically what to do, you should not be trading with real money yet. Okay? I understand you might be a beginner. Start learning the game and start practicing with paper money. Don't be asking someone to tell you specifically what to do if you're going to go and risk your real money. Okay, now there's a couple different ways you can go about setting up your trading plan. All right, like I said, we just need those three things. The first thing that you can do is what's called a percentage plan, where basically you're going to enter at a certain point, maybe a break of a support or a resistance, and you're going to exit, you're going to take profit, say at 20%. As soon as you hit 20%, you're just going to go ahead and take that profit, no matter if it keeps going or not. And then maybe you're going to set your stop, you're going to cut your losses at 5% or 10%. That could be a trading plan, and that would be percentage based. And again, you can adjust those percentages. That was just an example. But whatever trading style works for you. If you are swing trading for several days, maybe you would enter, again, choose your enter point. Maybe it's a confirmation of, say, a golden cross, for example, a cross of the 50 EMA over the 200 EMA on maybe a daily chart, okay, because you're swing trading. And then maybe you don't have a stop loss on that. You're just going to put in whatever you're willing to lose. You're going to buy further out contract, or you're going to buy shares, and you are going to take your profit once it reaches a certain percentage or once it reaches a price target. So again, it's going to vary widely depending on how you intend to trade that position. If you're going to be holding it, if you're going to be selling it, scalping it very quick, it's going to vary. So that's one way you could do it. You could do percentages. What I like to do, and what I would recommend somebody if I was teaching somebody brand new, is to trade the charts. Okay, the charts don't lie. They say politicians lie, the media lies, but charts don't lie. And so I'm going to show you a little bit of how I trade what the charts are showing me and give you some few examples on different time frames. So here we go. Let's look at the charts. Okay, so as you can see here, I have Square pulled up and I have it on the 5-minute chart. So let's just go through some hypothetical examples here. So say we're at market open. All right, I'm going to zoom in. So we're at market open, say we have these pre-market levels. So maybe I want to enter this trade. If I'm day trading, for example, I want to enter this trade as soon as it breaks the pre-market highs, which would be around 188. So we want to enter as soon as we get a confirmation above 188. That would be, what would that be? That would be my first part of my trading plan. I know where I'm going to enter, okay? So I'm going to enter as soon as it breaks above this level, 188.36. Maybe if we were going to be more conservative, we'd round up to 188.5, okay? And we're going to enter once we get confirmation above that. What does confirmation mean? That means that the candle closes above that level, and then the next candle opens above that level. So we can see, so if I just draw this line here, say 188.4, let's go with that. We can see this candle right here, there's a wick on it. Obviously, we can see this chart on how it played out, but in the moment, you're looking at these candles as they form, right? So you can see this candle, we broke above, and we rejected. There's a wick and we closed under this level. Then we pulled back a little bit. This next candle broke above again, closed above. Okay, I'm not entering yet, but now this candle. This is the candle that's opening above this pre-market high, and that's going to be my confirmation. All right, so very important to get confirmation there. So this is one example of how I might do an entry here on a day trade. Okay, so now I have my entry. Where am I going to exit? And where am I going to take profit? Well, I actually traded this the other day, and I knew that I had a support at, or it's not a support, a resistance rather, at 195. Okay, so we had a resistance there at 195, and I already knew that ahead of time. So what I did was I entered here. Now where do I exit? Well, this is going to be dependent on the EMA 9 here. Now I'm on the 5-minute candles. If you wanted to be more conservative, you can go to the 1-minute candles. Okay, and so if we have a break above the resistance here, and maybe we're going to exit this trade if we confirm below this blue line right here. That would be my EMA 9. That is where I'm going to exit. Okay, so now rather than setting a percentage, I'm using an indicator to determine where I exit. That's what I mean by trading the charts. Okay, so if we get a confirmation, not just a dip below and then the wick forms, but another candle forms underneath the EMA 9, that's when I will exit as that candle. So I entered here, we rode this up, again riding this. I see here we're going to test EMA 9, but look, we did not go below it and we did not confirm below it. I'm still in the trade, we're going up, we're testing EMA 9, still bouncing off of it. Okay, now we have reached my price target. I knew 195 was going to be a resistance. Why is that? Why is 195 a resistance? Well, we can look, that's why we look at our larger time frames before we enter the trade. So we know from the daily and from the hourly, we had, here was the previous high, 190. Okay, so we know that resistances, even numbers, the 5s and 10s, 5s and 0s are going to be resistances. So 195 is going to be a resistance. So maybe I would sell there, I would take profit, or I would hold for more risk. Now we know, obviously, looking at this chart, that we continue to trend up that day and actually hit 201. But again, we don't know that in the moment, okay? And look, indeed, we did pull back here after we hit 195. So I might take my profit there once we hit resistance. And that's how you're going to use the charts on a scalp. Now let's see if we wanted to swing trade square. Okay, maybe we'll have to go back in time on the hourly. Okay, So maybe we have this swing trade, we have this death cross right here. See this death cross? That's where the white line, the 200 EMA, is crossing over the 50 EMA, that's the green dotted line. So maybe that's my confirmation for entry. So it looks like that happened after hours. So maybe on this day, I would enter into puts and play the downside. And that would be a swing trade. And then maybe my stop loss would be a certain percentage, maybe 50% if we're going to be swing trading. Maybe it would be a break above a certain support or resistance. Or maybe my take profit would be a certain percentage. So that's where I might... You can be a little looser with swing trading because, again, you're holding it for several days and you're giving it time. So swing trading doesn't actually require as much technical analysis necessarily. It's more you're looking at the overall trend. And so that's why I would say if you're going to be looking at your trading plan for swing trading, you want to find a break above a certain level to enter, a break above or below, I should say. And maybe you have a percentage that you're cutting. Maybe you have a level that if it breaks below, you're cutting. But you want to be more generous with your swing trades, because if you're going to be holding it for several weeks, let's say, it's okay if you're down on it. You're not concerned about what it does that day necessarily, but you're concerned about the overall trend. So these trading plans, for the remainder of this video, I'm going to focus on more day trades. So let's type in another ticker. Okay, let's do QQQ. That's the NASDAQ. Okay, so let's just go in on a 5-minute chart. Okay. So, where could I day trade QQQ if I'm looking at the 5 minutes? Well, let's see. We had this dip here in the morning. If I planned on playing the upside, we have this support here at 290. So I would be watching, once I see this falling here, I'm going to be watching for what it does around 290. And just sitting on my hands. Okay, it's bouncing off 290. Do I enter yet? No. At least not me personally. Again, these are just some ideas. I might do it at a breakover VWAP. That's this purple line here. So we have this nice bullish candle. We have this next candle, goes over VWAP, retracts. Then this candle right here on the 5-minute opens above VWAP. So maybe I would enter there, and maybe I would exit at a break below the 9 EMA, let's say. So again, I'm entering here, I'm writing this up, this candle begins to break below, so maybe I would exit in the middle of this candle forming, let's say. So these are just some different trade ideas. Again, I'm not telling you guys what to do. I'm just showing you that you guys need to have a plan before you get into the trade, okay? You can't just get in and not be using any sort of risk management or any sort of idea of where you're going to take profit or where you're going to cut your losses. You guys got to have a plan, all right? But again, it doesn't have to be complicated. You just need 3 things, again: an entry point, an exit point to cut your losses, and a point at which you're going to be taking profit. So again, a couple different ways you can do it. You can do the percentage route. I'm going to cut my losses at 10% no matter what. And you could do a percentage take profit. So I'm going to take profit at 25% no matter what. In my opinion, I think you might be missing out on some gains. You might be selling too early, because what if there's no reason to sell at 25% because it's not dipping below any indicators and it just keeps rocketing? Well, then you're cutting yourself short. So I like to play the charts. If it reaches a certain resistance and starts to struggle, then I might sell at that point. If it reaches a certain resistance and breaks right through it, well, I'm going to keep holding it because clearly it's going higher. If it's reaching down, say on the 5-minute for day trading, if it's reaching down on that 9 EMA, and I'm going to be watching it. If it bounces up, then I'm not cutting my losses yet. But then if it dips below and then confirms below that EMA or VWAP or any other indicator that you may choose, I tend to ride off of the EMAs a lot. But if it dips below that and confirms below that, then that's where I cut my losses. So just some ideas for you guys. Of course, it's going to be based on your trade. If you're scalping, you might use the 1 minute. If you're day trading / scalping, but the 1 minute just kind of stresses you out too much, kind of like me, I use the 5-minute a lot for day trading. If you're swing trading, you're going to look at the bigger time frames and the larger trends. And then for your intraday charts for longer holds, you might use the 15-minute intraday. These are all just ideas, but this has been what's been working for me. Of course, you guys have your MACDs and other indicators as well, and your RSIs and stochastics. I can go all day on those, but these are just some ideas. You guys need to have a trading plan. So next time you go into a trade, think about, where am I going to enter? Ideally, that is going to be a break of a certain support or resistance and a confirmation above or below that support and resistance. So that's going to be your entry point upon confirmation. Again, what is confirmation? You should know this. Confirmation is that the next candle is opening above that certain support or resistance. So that's your entry point, your exit point for when you're going to cut losses, and your take profit point. Ideally should be at a certain support or resistance, or maybe you're just comfortable with your gains. Maybe it's a real runner and it's 100%, 200%. You just want to lock in those profits. That's okay too, but a certain point that you're going to take profit at. All right. I see a lot of people getting greedy though with their profits, and they want to keep holding, but they don't have their resistances drawn out. If it's hitting a certain resistance and showing struggle, that could be a good indicator to lock in profits. So in summary, creating a trading plan, entry point, exit point for cutting losses, and a take profit point. Know your support and resistance levels, know your indicators, know your risk tolerance. Okay? You might have less of a risk tolerance than I do. Maybe you have more of a risk tolerance. You want to look at the 15-minute. As long as it doesn't break below VWAP on the 15-minute, you're still in it. Okay? And again, guys, don't forget to always wait for that confirmation. Don't just wait for it to break above your level. Make sure it confirms. All right? Thanks so much for watching, guys. I hope this was helpful. Leave me a comment below if you have any questions, comments, or concerns, or any methods that work well for you that I haven't mentioned. And as always, make sure you give a big thumbs up, like, and subscribe. And also, if you are looking to join a trading Discord, the link is down below to join the Trading Alphas for just $1 for your first month. It's a great Discord group with education, a good community, and daily alerts. So you can't go wrong for $1. All right, have a good one, guys.